Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I am going to be breaking down this new forex strategy that I founded called the SDI stop loss model. Right now guys, this stop loss model guys has been able to help me pass my phase 1 challenge in my SIEG fund. Right, so as you can see on my dashboard guys, I am literally basically past my account. As you can see, my current equity is 22,000, and the profit target for my phase 1 is 10%, which I've already hit. But guys, with this specific prop firm, I have to hit 5 profitable trading days. So basically I have to make at least 0.5% for 5 days on a different day, right? But basically guys, this strategy is 100% win rate, because basically my first trade I was able to make this on my first trade. But guys, because I still have to hit the consistency rule, that's why I have all these trades here, and my profits or my win rate is basically 45%. But essentially guys, this SDI stop loss model is what has helped me to be able to achieve this kind of results, right? And essentially guys, it's basically just 3 different things that you need to understand to be able to understand this model. The first thing you need to understand about this model guys is the doji candle, right? So the doji candle is basically what you need to watch out for whenever you're looking for the start of the SDI stop loss model, right? So in my trade right here guys, I currently took a trade in my last session from here. Now the reason I took this trade was actually very simple, but essentially guys, with the SDI model, you have to wait for price to reach your area of interest first. So in this case here, price actually had an area of interest around this place here. So what I'm going to do guys is I'm going to actually go to a new chart and then clear my drawing so you can actually see, right? But basically guys, I start with the daily time frame and then work my way downwards, right? Basically it's my top down analysis. So essentially what I do is mark my area of interest on the daily time frame. So in this case here, this would be my daily area of interest, let's say somewhere around here. Boom, like that. And then my next area of interest would be somewhere around here. Boom, like that. Now the next step is to go to the 1 hour time frame to do the same thing. Now in this case here guys, when I was looking at my chart, price was literally right here, right? Now with my area of interest, I actually had this marked up the first time. So I actually had this area marked up the first time here. Boom. And then when price now gave this evening star, I now looked, okay, price actually has this area of interest here, and the trend is currently sells. Why? Because if we follow the path, you're going to see that when price was creating higher highs and higher lows like this, right, price made this low here and then made a high, then it now broke below that previous low, and then that was the sign that the trend has changed from buys to sells, and we will now wait for a retracement, and then as you can see, it's sold back down, then retraced up using this area of interest, and now it's looking to then now sell back down to continue the trend. So now when I saw this play out, which was during the Asian session, I actually saw that there was an area of interest right here. Boom. So if I do something like this, right, so something like this could be an area of interest. So if I do like this might be too big, but honestly this was basically how I had it, right? So you can see that price actually kind of broke and retested here in a sense, here to here to here to there were slip ups, which was this slip up, but overall it was still respecting this area of interest. So when I see this guys, the first step is then now to wait for price to go to your area of interest, which I've done, and then the next step is now to look for a doji candle which has already been formed in the past or in future, right? So in this case here guys, literally when price came to this area here, I looked to the left and seen that there was actually this doji candle here, and this specific doji candle guys did not give us any entry, any sell entry when it was selling here. So for example, this was like a shooting star, but a buying shooting star entry, so this was not even a valid entry. Same with this too was there, but you can see that price was literally down here, so obviously this is not a good time to actually buy, to actually sell your trade here. But eventually guys, price now came up to this area and then give us this evening star. So when we now see this doji candle, what we then now do is mark that doji candle from the top of the wick to the bottom of the wick, and then color code it to, let's say, gray, to give you that sign of liquidity or the area for the doji. So that's basically what the SDI model is. So the first step guys is to wait for price to reach your area of interest. That's the first step. Now the second step is then now to look for a doji candle being formed or a doji candle has already been formed, right? So in this case here, this was the doji candle already formed. Then the next step, guys, is to wait for price to give you your entry that is following the trend, or the entry that you're looking for, essentially, right? So in this case here, my entries are not usually, but my entries are always the shooting stars or the false Harami breakout, right? But in this case here, my entry was the shooting star. So you see how patient I was, right? In the kit, right? So you see how patient I was when price came here, gave us this entry, this buy entry here. I did not take a buy, give us another buy entry. I did not take a buy until price gave us this sell entry here. So when price gave us this L entry, all I did was place my entry right there, boom, and then stop loss above the box. Now the reason why I call this the stop loss entry model is because, number one, guys, this is basically stop loss proof. This is essentially, guys, an 80% strategy, right? And also, guys, the reason why I call this the stop loss model is because, guys, literally price will give you, or will actually go into a drawdown. Like, we actually expect price to go into a drawdown, actually a very heavy drawdown, right? But guys, the caveat is you actually enter from the drawdown. Do you understand what I mean? So let's actually play the market real quick. So let's see what happened. Okay, price actually sold back here. So this will not really be a good example, but essentially, guys, like, we wait for price to basically go into a drawdown here. Once price goes into a drawdown, then we take our trade. So in this case here, if I was to go to my previous chart here, you're going to see that, okay, price actually gave another second entry here again, right? So let me give you this example here, boom. So if I fast forward all the way, you're going to see that price now came, gave another entry here. Now this will not be considered as the stop loss model, right? Because basically, you know, price just essentially retraced and then came to this area here and then gave us like basically a shooting star entry. So in this case here, I wouldn't even be worried about anything here, because if you notice above this area here, there's actually no doji candles here that price wants to actually take out for, you know, in terms of liquidity. So you're actually pretty good here in terms of taking the sell. So in this case here, price gave you another doji candle here. So let's see if price takes out these highs. So let's see if price actually took out the highs. So we're going to make our box here, boom, like that, and wait for our entry. Let's see if price did take out the highs. Boom, as you can see, it took out the highs, boom, and then gave you this entry here. Then you would have taken your second entry. But in this case, I actually took my second entry in this candle there. So as you can see, boom, it sold perfectly, beautifully. And then in terms of my target, right, I always target doji candles. So again, basically, this was my target right here. This was my target right there, boom. Why? Because this was a doji candle, and doji candles represent liquidity, right? So I basically did this liquidity down there, boom. Price managed to hit my TP like that, boom. Okay, we actually did retrace up. So notice again, price retraced up here. Now this is the reason why you have to mark your area of interest, because this was another area of interest right here, as you can see, boom, and then like that, right? And then let's see what happened next. Price then now sells back down. Does it continue selling? Okay, it continues to sell. And then let's see what happens. Is there any area of interest? There is, like, I could call this like an area of interest right here, actually. Yeah, so I could actually call this an area of interest right here, boom. So like right here, right? And then if I extend this to the right or to the left, let's see, it does kind of match in a sense, you know what I mean? Like, there is like slip ups. This is basically like a slip up here, right? But you can still see that price respected it here. You know, after the slip ups, price never gave any more slip ups. So basically this area of interest is still valid, right? And you can see it's still valid here and still valid here. So in this case here, we'll wait for price to retrace again. Now watch this. Price then now retraces all the way up there. Now see what happens. Price gives us this doji candle again. So this is basically another SDI stop loss model. So price gives us this doji candle. Now this doji candle basically represents a sign of liquidity. So this will be liquidity right there above, like that, and then you label it liquidity up like that, and then wait for price to take out the liquidity and then arrive at our area of interest and then give us an entry. So you see, boom, price comes, takes out the liquidity right there, right? Because obviously price is looking to still sell. People will think it's selling because this is actually a shooting star, you know what I mean, entry here. Even me too, I was thinking of actually selling, to be honest with you, but I said no. Waited, price now came, give us this entry, right? But you have to be patient, right? Because price has not yet tapped our area of interest, in this case here. Boom. And then finally now, then I tapped it. When he tapped it, and then I took my entry right there. Boom, like that. So in this case here, I took my entry right there, took a sell entry. So stop loss was basically like somewhere around here, because you know it was actually towards the market open, but originally my stop loss was basically above this box right there. Boom, right? But because of, you know what I mean, market close and stuff, I just kind of increased it here just so in case spread, you know, tries to manipulate price. But still, stop loss was basically right there. And then if you notice, price then now went into a drawdown. So that drawdown is basically what we are waiting to then now enter. So if you go to, let's say, to the 1 minute time frame, you're going to see that price managed to go into a drawdown again. So if you fast forward like this, right, you're going to see price actually did go up. So let's see, did it continue to go up? Okay, yeah, so it basically went up this way. So if I was to pause this and then reduce this and take this up, so first off, let's actually remove this, go to the 1 hour time frame, and let me show you something, right? So essentially, guys, again, my TP zone will probably be, let's say, this area right here. You can see why, because of this doji candle here, right? So in this case here, this would be a nice 1 to 3 ways to reward originally, but let's say we did enter from the top, which was basically, let's say, somewhere around here. So realistically, just let's say here, boom, you're going to see now that that has turned into a 1 to 9, and this is basically where I literally entered, guys, right? So right now, guys, I'm expecting price to basically sell all the way to this area here to then now take out this liquidity below this, you know what I mean, line right here. Boom, as you can see. And then overall target is going to be this daily time frame right here, or we can say, let's say, boom, 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 maybe this candle here. So this candle here, or if we look to the left, you can then now look for more doji candles. But essentially, guys, this is basically what, you know, we're looking for right now in GJ. So hopefully, guys, price literally sells, like literally dips. So if I was to fast forward this, you're going to see this is basically where price is right now. So hopefully price literally from here opens and just opens down essentially. But this is basically what the SDI stop loss model is, guys. If you want to learn more about this, just click the link at the bottom of this video or the first comment, guys. You're going to get this ebook, right? It's going to explain to you the whole strategy that I use from A to Z, right? So essentially, guys, my 4 years of experience covered in literally 35 pages or 36 pages, right? So 37 pages actually. But yeah, guys, I hope you guys enjoyed this video and I hope you guys gained a lot from this. I'll see you guys in a different video. Peace.